Good day and welcome to Smart Money Oz. Did you know that if you invested just $500 a month consistently from age 25, you could retire with over $1.2 million by age 65? That's right. Even with a modest income, regular investments of $500 monthly could set you up for financial freedom. Today, I'm showing you exactly how to make that happen using strategies specifically designed for Australians in 2025. Stick around, this could be the most important 10 minutes for your financial future. Before we dive in, hit that subscribe button and notification bell to join thousands of everyday Aussies taking control of their finances. Here's the thing. Most Australians know they should be investing more, but they're overwhelmed by options, or think they need thousands to start. According to the latest data from the Australian Bureau of Statistics, nearly 40% of Australians have no investments outside their super. Meanwhile, inflation is eating away at our savings, with cash in the bank essentially losing value every year. The problem isn't just about having $500 to invest. It's knowing where to put it for maximum growth, without taking on unnecessary risk. Whether you've just started saving that $500 monthly, or you're ready to put existing savings to work, today's strategies will help you build serious wealth over time. Your first investment priority as an Australian should be maximizing your super. It's tax-advantaged wealth building that many people overlook. First, consider salary-sacrificing additional funds into your super. For every $500 monthly contribution, you'll only see about $325 to $400 less in your take-home pay, depending on your tax bracket. That's instant returns through tax savings. Next, check if your super fund is actually performing well. The difference between a fund returning 7% versus 9% annually might not sound huge, but on $500 monthly contributions over 30 years, that's a difference of over $200,000. Use comparison sites like CanStar or the ATO's Your Super tool to see how your fund stacks up. Finally, if you're under 50, consider switching to a high-growth option within your super fund. Yes, there's more volatility, but with a 20-plus year timeline before retirement, historical data shows you'll likely come out significantly ahead. A simple fund switch could mean hundreds of thousands more at retirement without any additional contributions. For example, Sarah, a 30-year-old nurse from Brisbane, switched from her fund's default option to their high-growth option and is projected to have an additional $320,000 at retirement without adding a single extra dollar in contributions. For investments outside super, exchange-traded funds, ETFs, traded on the ASX, provide an excellent foundation. Start with broad-based Australian ETFs like Vanguard's VAS or BetaShares A200. These give you exposure to the top 200 to 300 Australian companies with a single purchase and typically have management fees under 0.2% annually. Then add international exposure through ETFs like VGS or IVV, which give you access to global markets. This geographical diversification protects you if the Australian economy underperforms. With just $500 monthly, you can build a portfolio that's automatically diversified across thousands of companies worldwide. Most brokers now offer free or low-cost brokerage. Platforms like SelfWealth, Stake, or Perla charge between $3 to $9.50 per trade, meaning you're not losing much to fees even with monthly investments. Consider Connor from Adelaide, who started investing $500 monthly in a simple 2 ETF portfolio 3 years ago. Despite market volatility, his portfolio has already grown to over $21,000, giving him confidence to continue his investment journey. If the share market still feels intimidating, Australian micro-investing apps provide an excellent starting point. Apps like Raiz, Spaceship, and CommSec Pocket let you start investing with as little as $5, perfect for building confidence. Many offer regular investment plans where you can schedule automatic deposits of $500 monthly. These platforms typically offer pre-built portfolios ranging from conservative to aggressive growth. While their fees are slightly higher than DIY ETF investing, the simplicity and automation make them worth considering, especially for beginners. For example, Raiz's aggressive portfolio has averaged about 8.3% annually since inception, meaning your $500 monthly investment could grow to approximately $165,000 over 15 years. The psychological benefit is significant too. Luke, a tradie from Perth, tried saving regularly for years without success. After setting up auto deposits with Spaceship, he's been consistently investing $500 monthly for 2 years without thinking about it. Building wealth on autopilot. You don't need a 20% deposit on a $1 million home to invest in property anymore. Fractional property investing platforms like BrickX, Domacom, or Stake Property allow you to buy bricks or shares in residential properties for as little as $100, giving you exposure to property markets without massive capital or mortgage stress. Alternatively, consider listed property trusts, AREITs, traded on the ASX. These give you exposure to commercial, industrial, and residential property portfolios managed by professionals. Popular options include Vanguard's VAP ETF, or direct investment in trusts like Goodman Group or Dexus. While recent property market volatility has spooked some investors, the long-term returns from quality property investments remain strong, averaging 6 to 8% annual growth plus rental yields of 3 to 5%. Many of these investments also pay quarterly distributions, creating passive income alongside capital growth. Your $500 monthly contribution could generate meaningful passive income over time, potentially $15,000 to $20,000 annually after 15 to 20 years of consistent investing. Investing ethically doesn't mean sacrificing returns, and many Australians now prioritize this approach. Ethical ETFs like ETH, BetaShares, Global Sustainability Leaders ETF, or FAIR, BetaShares Australian Sustainability Leaders ETF, have actually outperformed many of their non-screened counterparts over recent years. Super funds like Australian Ethical and Future Super offer high-growth ethical options, often delivering competitive returns while avoiding industries like fossil fuels, tobacco, and weapons. The trend towards sustainable investing is accelerating, with over $1.2 trillion now invested in responsible investments in Australia. This growing market demand could potentially drive stronger long-term performance as companies adapt to meet environmental and social standards. Emma, a teacher from Melbourne, switched her investments to ethical options 3 years ago. Not only has she seen competitive returns, but she also enjoys the peace of mind, knowing her money aligns with her values while building wealth. Let's recap the strategies we've covered. 1. Boost your super contributions and optimize your investment options. 2. Build a core ETF portfolio for simplicity and diversification. 3. Use micro-investing apps to automate your investing journey. 4. Consider fractional property or AREITs for real estate exposure. 5. Align your investments with your values through ethical options. The key to success isn't timing the market or picking hot stocks, it's consistency. That $500 monthly investment might not feel significant now, but with average annual returns of 7 to 9% and the magic of compound growth, you're looking at potential wealth of $35,000 after 5 years, $86,000 after 10 years, $228,000 after 20 years, $745,000 after 30 years. And that's without increasing your contributions as your income grows. If you found value in today's strategies, smash that like button and subscribe to Smart Money Oz for more Australian-focused financial wisdom every week. Have questions about these investment approaches? Drop them in the comments below. I personally respond to as many as possible. And stay tuned for next week's video, where I'll be comparing the top 5 money-saving and investing apps in Australia, including which ones offer the best returns and which have hidden fees you should avoid. You won't want to miss it. Remember, financial freedom isn't about making massive changes overnight. It's about consistent, smart decisions that compound over time. Today could be the first day of your wealth-building journey. Until next time, this is Smart Money Oz, helping you grow your wealth the smart Aussie way.